Hey, dear students, Assalamu alaikum. This is Mustafa Mirchawala, your trainer, F6 TX trainer. Uh, Before we move on, this is basically the webinar for September 23 attempt. And we all know the objective of this webinar is not just the practice. The objective is always to giving you guys confidence, right? Okay, because you have everything now. You have a lot of lectures, a lot of past papers, a lot of exam kits, and you all, and I assume that by now you have done almost 80% course. By now you have done almost 80% of the course, right? Okay, so i would I would request you to be confident now. Be confident now, as these are the ending days, and the confidence is the main thing which will make you help to clear the paper. Now, for you guys motivation, look at the scores, see the scores. These are the recent scores. These are not 4 years old or 5 years old scores. These are the very latest scores scored by the students who attempted the last attempt paper. Okay, so when these normal guys, they also did the same thing what you guys are doing. They also attended the normal course, then they attended the revision days, they made the notes, they made the exam folder. For F6, the exam folder is very important thing. Exam folder is the very important thing. Like after each and every chapter, you need to write the summary. You need to make your own summaries. So in these days, like in the last days, you can revise your summaries as well. So they followed the same path, same path. They did the mock exam, everything, and they scored this thing. And you can see they are from different parts of the world. Even in this list, you have USA, Saudi, Nepal, India, you have UK, Bahrain, Zambia, everywhere, UAE, all from different parts of the world. And these are not all the students, they are just few students which we gathered, right? Okay, so it's not difficult. Plus, one good news, F6 exam, TX exam pass rate is very good. Even last time it touched 56%. 56% is extraordinary. Normally the pass rate is around 50%, 49 to 50%, but this time it came 56%. So just give this message to your mind that you can clear it, that you can clear it. You are not doing any abnormal thing. Normal students can score this much, and your target is just to pass. I would say your target is just to pass. In my eyes, the major score is 50. If you score 50, you have done everything, right? Okay, that means you've promoted to the next level. Okay, so now today we are going to do a latest past paper, a very latest past paper, which was disclosed by ACCA publicly, like in last week. Okay, and that is March June 23 past paper. Okay, so that past paper will give you confidence that how to attempt. And we'll be doing, they only release the section C. They only release section C. One more thing I would request you, that you guys should also read the examiner report. Examiner report is very important. You all must study the exam report thing, okay, right? So I would say now we are moving towards the past paper, and we'll also solve it, some parts on the Excel, definitely spreadsheet, right? Okay, so in section C, one more thing, I told in my past lectures, in my past webinars, I taught this thing that ACCA body itself says, the expert of ACCA says that the reason of failure in skills module is section C. The reason of failure for skills module is normally section C. So I would request you to practice more and more for section C on software, right? Because if you don't have practice on the ACCA platform page, then you won't be able to perform in the exam. Okay, right? Now, this is basically a 10-mark question. You all know there is no, in section C of TX paper, in section C of TX paper, you will have, in section C of TX paper, in section C of TX paper, you will have, listen, one 10-mark question, which is normally tax planning area, and two questions of 15 marks each, right? Okay, and yes, one more thing I assume by now you all know is ACCA is a study hub. Now you have, besides Kaplan and BPP exam kits, you have one more area, that is a ACCA study hub. Free resources available by ACCA on ACCA study hub. You can also solve different new questions, and you can also do the mock exams as well. Okay, so I would recommend you to avail that ACCA study hub resources as well, right? But right now it's not mandatory. One confusion, many students think that the Kaplan and BPP material is obsolete now. No, still there is one more year left. In this year, Kaplan and BPP are still registered publisher, and ACCA study hub is also there. But after 1 year, there will be only registered resources of ACCA study hub, right? Okay, let's start. This is the planning question, and it's not difficult at all. Just you need basic concepts, and you will do it. Just basic concepts and you will do it, right? Let's start. And if you want to take the picture of this question, you may. And within 30 minutes, I'll also send you the link of WhatsApp group. I have made the WhatsApp group. I'll be sending you the link of that WhatsApp group soon, okay, in this chat box. Don't worry about it. Okay, so now concentrate on your paper. Let's start. This scenario relates to 5 requirements. You should assume that today's date is 25th of March 2022, and the tax rates and allowances for the tax year 2022 apply throughout. Okay, that means 22-23 fiscal year rates will apply in this question in all fiscal years, right? K is currently employed at a gross annual salary of 200,000, big number, 200,000 pounds. That means he's doing job right now, and the salary is 200,000. 200,000 means greater than 150,000. So he is additional rate taxpayer. Rate taxpayer. You must have recognition skills. Within seconds you need to recognize the taxpayer status. Okay, now K will continue to earn the same salary until he retires on 5th April 2026. So after 3-4 years, he will be retired. Okay, at which point his pension income will reduce to gross annual pension income of 55,000. Now, very interesting. That means right now he's making 200,000 pounds a year, which is non-saving income. And after 2026, his income will be 55,000. 55,000 means he will be higher rate taxpayer in future. This means that K is currently an additional rate taxpayer. Yes, currently it's greater than 150,000. Currently the income is greater than 150,000. Use your brain. But will only be a higher rate taxpayer from when he retires after 26, on 5th April 26. Means in 26-27 fiscal year, in 26-27 fiscal year, he will be a higher rate taxpayer. Right now, he is additional rate taxpayer. I hope you know the meaning of additional rate taxpayer. But after 2020, in 26-27 fiscal year, he will be higher rate taxpayer. I again request you guys not to open your camera, otherwise the recording will be disturbed. Please, it's a request. Control your camera. Now, K will undertake. Now, this is the real scenario. This is the real story. That was all. The first paragraph was just the beginning. The real story starts here. The first paragraph means the existing income. Now, the additional income. K will undertake 40,000 of work as a freelance basis during the year ended 5th April 2023. See, this question is related to practical life. Nowadays, everybody is doing job as well as some freelancing. See, this is the reflection. ACCA body gives you real life scenario. This scenario is very common nowadays. Students doing job and as well they are doing some freelancing, right? Okay. So now this is an additional income of 22-23 fiscal year. To carry out this work, K will form a new limited company, corporation tax is also there. Z Limited, of which he will be an employee. This freelance work will not involve any expenditure and will last just for 1 year. So this is only for 22-23 fiscal year. This freelance work is only for 22-23 fiscal year, only 1 year income is there. 1 year income is there. Be careful. Z Limited will prepare accounts for the year ended 5th April 2023. So the accounting period is also 5th, ending on 5th April 23, and it's starting on 6th April 22. The accounting period is important. Why? Because accounting period is important. Accounting period is important, my dear, because companies pays tax for accounting period. So it's basically a simple 12 months accounting period. It's basically a simple 12 months accounting period. Okay. So now this guy K has incorporated a company Z Limited, right? Now the next issue is how to extract those who have taken this class. Those who have attended my tax planning class, they know this. They know this, how to extract funds from the company. This is the company, and now we have to extract funds. This K will extract funds from that company. How? What are the techniques to extract funds from the company? Now, there are 3 ways in this question it is given. In this question, 3 ways are given, but yes, for this question, you must have knowledge of complete tax. For this question, my respected students, my dear students, you must have complete tax knowledge. Okay. Now listen. Alternate number 1. After allowing for corporation tax, K will withdraw the entire net of tax. Net of tax profits means profit after tax, PAT. Obviously, when you withdraw dividends are always distributed from profit after tax. Dividends are always distributed from profit after tax. So during the tax year 22-23. Okay. Now this is alternative number 1. That means he will simply take dividends from the company. He will simply take dividends from the company. In this question, you don't think of sleep. Please, you have to be very alert. Very, very alert. Don't sleep. Now wait. Can you see, my dear students, can you wait? Can you see that this guy is additional rate taxpayer? Yes, the recording will be available, don't worry. And now just concentrate on the class. Can you see that this guy is additional rate taxpayer? Already he has an existing income of this 200,000. This guy has already an income of 200,000, right? So he is an additional rate taxpayer. Don't worry about, don't miss this point. And now we need to calculate this additional scenario. This is the additional scenario. This is the additional scenario, right? Now read the requirement number 1. Requirement number 1 says, assuming that K withdraws the entire net of tax profits as dividend, alternative 1. For example, he avails alternative 1. He avails alternate 1, right? Okay. Now, calculate the corporation tax liability. 1 mark. I would say it's free marks. Free. Those who have done corporation tax, they know. It's total free marks. Just party. And the second requirement is calculate the income tax payable. Dividend income, 2 marks. Again, this is also free. This is also free. These 3 marks are free. These 3 marks are free. That's why the pass rate is 56% last time. Now wait. I have the solution, everything ready. Everything is ready. We just need to discuss the concept. 40,000 is the income of company. Listen, look at here. 40,000 is the income of company and there are no expenses. You just read the question. There are no expenses. So this is final profit, and companies pays a flat tax rate. Company pays a flat tax rate of 19%. So what is the corporation tax? Come on, tell me. Use the chat box. Use the chat box. Students, please use the chat box. 40,000 multiplied by 19%. Tell me the amount. 7,600. Yes, this is 1 marks. This is your corporation tax. Don't worry. No need to copy. Corporation tax is 7,600. 1 mark. 1 mark. You got it. Everybody got this 1 mark. Now wait. Now we have, the dividends are distributed is always after tax, So 40,000 was the before, 40,000 was the before tax profit, and this is the tax. So what is the after tax amount? What is the after tax amount? Very simple. Go very simple. What is the after tax amount? 32,400, right? So this amount will be given as a dividend. This amount will be given as a dividend. Open your eyes. This amount will be given as a dividend, right? Now this is the dividend income for K. Now this is the dividend income for K. Use your brain. K already has a salary of 200,000. K already has a salary of 200,000. Now the dividend income will come of 32,400. And you only have to calculate the additional tax on dividend income. No need to calculate tax on salary. Only see, calculate income tax payable in respect of dividend income. Now, hope you remember my lectures. For dividend income, always there is an NRB, nil rate band of 2000, remember? So out of this 32,400, first 2000 multiply by 0%. First 2000 multiply by 0% NRB, right? And then you have to apply normal tax. So out of 32,400, just simply remove 2000. Simply remove 2000 from 32,400. Simply remove 2000 from 32,400. This will be 30,400. 30,400. Now, just use your brain. This person already has a salary. Salary means non-saving. This person already has a salary. Salary means non-saving income. And yes, whenever we calculate tax, we first calculate tax on non-saving. Whenever we calculate tax, we always calculate tax on non-saving income first. Remember? So when it is 200,000, when it is 200,000 salary, that means first two bands till 150,000 consumed. So now this guy will come in the additional rate, and it was also written in the question. So can anybody tell me what is the additional rate for dividend? Can anybody tell me what is the additional rate for dividend? Dividend, please don't sleep, don't take drugs. What is the additional rate for dividend? Yes, 39.35, 39.35. Please don't use drugs. It's very dangerous. 39.35%, 39 point additional rate. Again, there is one druggist. 39.35. Okay, so 119. How much is the amount? 119.62. That's it. 119.62. This is the income tax on dividend. You simply got 3 marks. You simply got 3 marks. That's it. You simply got 3 marks. You simply got 3 marks. Okay. So it was not a big deal at all. It was not a big deal at all. Now, what is the presentation? How you have to write? I'll show you. It's just one line. Just one line you have to write. Simple. Read it simply. This is the solution. ACCA Limited corporation tax liability will be this. 40,000 at 19%. This is 1 mark. This is 1 mark. Then K will receive dividend income of 32,400. This I just taught you, and the income tax payable on this will be 32,400 minus 2,000. Why they subtracted 2,000? Because 2,000 is NRB. 2,000 is NRB. 2,000 is NRB. 2,000 is NRB. So this is the tax. So this is 2 marks. And this is 1 mark. Okay. So this is the exam. This is the real exam. Okay. If somebody is asking about the PDF, yes, I'll send you the PDF after the end of the class on WhatsApp group. Don't worry about it. Don't worry about it. Just concentrate on the exam, on the paper. So this is the alternative one. Alternative one is take out complete amount as dividend income. Okay. Now read alternate two. Read alternate 2. Just think the company has been formed. Respected student, just think company. Yes, I will send the recording now. Just concentrate on the lectures, all of you don't think anything. Alternate number 2. Company has been formed. The second way of taking out money from the company is be the employee of company. Okay. ZQ Limited, this is alternate number 2. ZQ Limited will pay K gross director remuneration of £8,000, and Z Limited will make a pension contribution of £32,000 into a company's occupational pension scheme on K behalf during the year 22-23. K has sufficient unused pension annual allowances so that a pension contribution of this amount will not result in any annual allowance charge. I hope you remember the pension rules. Now listen. Look at here. This is the company. This is K. Now K is the employee and company is the employer. K is the employee and company is the employer. So company is paying 8,000 salary to this K. Okay. Yes, salary is an allowed expense, and also company is giving 32,000 occupational pension contribution. So whatever pension contribution company is doing, that means that is called employers pension contribution. Employers pension contribution is also in occupational. Employers contribution in occupational pension scheme of employees allowed expense. It's also allowed expense for employer. So both of these, this 8,000 salary and this 32,000 occupational pension contribution, both are allowed expense. Both are allowed expenses, right? Okay. So both of these will be deducted from the limited company's profit. So now wait, just use your brain. 40,000 is the profit of the company. 8,000 is the first allowed expense, which is salary, and 32,000 is the occupational pension contribution. So in this case, company's net profit will be 0. Company's profit will be 0. So no corporation tax to be paid. This is the first point. No corporation tax to be paid. Now come to the employee K. One more thing. You will say, sir, company is employer. Company is employer and K is employee. Company is employer. Don't sleep. Rates, you must know the company is employer and K is employee. So company has to pay class 1 employer and IC. Yes, company has to pay, but you know the class, do you remember the rates of class 1 employer and IC? This 8,000 salary is very low. This 8,000 salary is very low. It will be consumed in the first band of class 1 employer and IC. It will be consumed in the first band of class 1 employer NIC. First band of class 1 employer NIC, right? Okay, so no need. So first thing what you learned is, in this case, there is no corporation tax because both of these are allowed expenses. Both of these amounts are allowed expenses. So no need to pay any corporation tax. Now come to the individual. Now this individual got the salary of 8,000. Do you know this fact that this, if you have read the beginning of this question, this individual is already doing a job. This individual K is already doing a job of 200,000 job, right? So this is one more job. So there are two jobs. Now he is doing two jobs. Now he is doing two jobs, right? So this salary is additional salary of 8,000. This salary is additional salary of 8,000. Now just use the common sense. Listen, already salary is 200,000. Already salary is 200,000. There is an additional salary of 8,000 in this in his account. So the first 200,000 salary, if you have calculated the tax on the first 200,000 salary, so this first 200,000 salary has already consumed your first band and second band till 150,000. So obviously this salary will fall in the additional rate. And yes, salary is a non-saving income. Salary is a non-saving income. So non-saving income will go in this case in the third band, obviously additional rate, and the rate is 45%. And the rate is 45%. So how much rate will be applied on it? 45%. Can anybody tell me? Can anybody tell me what is the 8,000 multiplied by 45%? Yes. So this is going to be 3,600. This is your income tax on this salary. This is income tax on this salary, income tax on this salary. Now, one more thing. As an employee, as a student, you have one question, and you all are going to learn something new now. You all are going to learn something abnormal, different thing. Sir, what about the class 1 employee NIC? What about the class 1 employee NIC? Each and every employee in UK, each and every employee in UK has to pay class 1 employee NIC. Each and every employee in UK has to pay class 1 employee NIC. But do you know one good news? Listen, if a person is doing two jobs, then both class 1 employee NIC will be calculated separately using the bands right from the scratch. Can anybody tell me the bands of class 1 employee NIC in the chat box? Can anybody tell me class 1 employee NIC in the chat box? Yes, the first band is 12570. The first band is 02 or 12570, which is nil rate band, nil. Class 1 employee NIC nil band. So now, whenever you are doing two jobs, let me say in Urdu language, because we have Urdu crowd or Hindi crowd as well, because I have already used English a lot in this. Agar, listen to me, अगर आप दो जॉब कर रहे होगे तो हर जॉब का सेपरेट क्लास 1 एम्प्लॉय एनआईसी मिलेगा, यानी हर जॉब के लिए अलग से आपको बैंड्स मिलेंगे. तो दिस इज द गुड न्यूज. सो नाउ जस्ट थिंक this guy has already doing one job. So for that job, this salary separate class 1 employee NIC will be calculated. And for this salary, for this new salary, a new class 1 employee NIC will be calculated. And when we will calculate new class 1 employee NIC, so it will be cancelled in the first band. So no need to pay any class 1 employee NIC here. No need to pay any class 1 employee NIC here. So just you have to pay this income tax. This additional income tax you have to pay. Take your time, think over it. I would request to read this part again. I would request to read this part again, and then I'll show you the requirement, and then I'll share the final solution, official formal solution with you. Okay, now read the requirement. See, this is the requirement B part. assuming that Z Limited will pay K gross direct remuneration of 8,000. Yes, this is the salary. And Z Limited will make a pension contribution of 32,000 in a company's occupational pension scheme. This is the contribution by employer on K's behalf during the tax year 22-23. Explain the corporation tax, income tax, and national insurance contribution implications of alternate 2. This is also 3 marks. This is also 3 marks. And one more thing, then we have to compare. Calculate the tax savings of alternate 2 compared with alternate 1, which is entirely as dividend. Just you have to compare the numbers then. Just you have to compare the numbers then. Wait, giving you a small touch. Wait. In the first scenario, 7,600 was the corporation tax. Open your eyes. In the first requirement, 7,600 was the corporation tax, and 11962 was income tax. Obviously, if this is your own company, obviously this is K's own company, so these two burdens will be borne by K. So 7,600 plus 7,600 plus 11962. Can anybody tell me? 7,600 plus 11962. Can anybody tell me? 7,600 plus 11962. Can anybody tell me what's the total? 19562. So do remember this number. In the first scenario, the total tax of this whole planning was 19562. In the first area, the total amount was 19562. Okay. Now students, come here. Now I'm going to discuss the solution of B with you. And I've already explained you in detail. See, first of all, paying the director's remuneration and making the pension contribution will reduce Zaku Limited taxable profit to 0 because 40,000 was the profit. 8,000 is the first allowed expense, which is salary, and 32,000 is the occupational pension contribution. So these two are allowed expenses, so no corporation tax liability, 1 mark. No corporation tax liability in this case. Now the second thing, K will pay income tax obviously of 8,000 at the rate 45% because now this is salary, and yes, salary is a non-saving income, and for non-saving income additional rate tax is 45%. So this is 3,600 because the pension contribution will be an exempt benefit. Yes, we all know whatever pension contribution you receive from your employer, it's an exempt benefit for employees, so no tax on it. Okay, 1 more mark. There will be no class 1 employee NIC because the earnings are 8,000 below the NIC lower threshold. The lower threshold, 12570, you guys told me. So no class 1 NIC implications. You again got 3 marks. Simple 3 marks. Now finally you need to compare alternative 1 with alternate 2. Listen, in alternate 1 I just told you these were the two. You told me 1,199. Sorry, it was how much? 19562. 19. In alternate 1, the total burden to be borne is 19562, right? 19562, right? And in this scenario, in this second alternative, only 3,600. This is the tax. Only 3,600 is the tax. So the difference, the net savings is 15962. The net saving is 15962 in alternate 2. If you use alternate 2 as compared to alternate 1, the additional saving is 15962. This is the simple answer. Okay. Did you understand till now? Please write in the chat box. If you have understood these things, you can write on the chat box, please. If you got it, please write on the chat box, please. Now then we have the last requirement. Now we have the last requirement of this question, which is alternate 3. The last requirement is basically alternate 3. The last requirement is alternate 3. K will not now. K will not withdraw any amount during the tax year 22-23. Yes, he earned 40,000 through the company. He earned 40,000 through the company, but he'll keep this amount in the company. He's not going to withdraw it. But yes, company has to pay tax, obviously. Company has to pay tax whether the company distribute profits or not distribute profit. I say this in Urdu. कंपनी डिविडेंड बांटे या ना बांटे, कंपनी ने खुद तो कमाया है ना, कंपनी ने खुद तो कमाया है, तो कंपनी को तो अपना टैक्स देना ही पड़ेगा ना, वो याद रखना. नाउ इंस्टेड ऑफ नेट ऑफ टैक्स ऑफ प्रॉफिट्स will be left undrawn in Z Limited until the tax year 26-27. Now we'll keep this amount safe in the company till next 4 fiscal years 26-27. When K has retired, he will then withdraw the entire net of tax amount as dividends in the tax year 26-27. Now, use your common sense. Why is he doing this planning? Why is he keeping the money in the company? Why is he keeping the money in the company for next 4 years? Why he's going to withdraw it after 4 years? Why? Because after 4 years, this guy will be an higher rate taxpayer. He will just be a higher rate taxpayer. Right now, he is additional rate taxpayer. Right now, he is additional rate taxpayer. You're not getting. Wait, let me show you. Let me show you. See this. See this. See this. See this. So after in 26-27, he will be higher rate taxpayer. Right now, he's additional rate taxpayer. So just for the tax saving purpose, he's doing this. Okay. Now use your common sense. What they are saying, see the requirement now. This is the last requirement now. Calculate the tax savings in respect of K dividends income and Z Limited corporation tax liability if K withdraws the entire net of tax profits of Z Limited as dividend during the tax year 26-27, which is alternate 3. When K has retired rather than during the tax year 22-23. So technically, my dear students, now we have to compare. Technically, now we have to compare alternate 1 with alternate 3, alternate 1 with alternate 3, alternate 1 with alternate 3. Okay, because we have to calculate tax savings also. Okay, so use your brain and now look at me. I'll explain you the things. Wait, let me write something here. See, first of all, in this 22-23, no matter he's not withdrawing the dividends, still he has to pay corporation tax, and the corporation tax is fixed. 40,000 times 19%. Corporation tax is fixed. So whether or not you withdraw dividends or not, you don't withdraw, still the company has earned the income. In that case, the dividend income is must. In that case, the dividend income is must. In that case, the dividend income is, sorry, in that case, the corporation tax is must. So this corporation tax, same corporation tax you have to pay whether you withdraw in 22, 23 or not. So this is same thing. This is indifferent, no tax savings in it. This is same thing. This is indifferent, no tax saving in it. Okay. Now, tell me how much is the net amount. How much is the net amount left in the company? How much is the net amount left in the company? 40,000 minus 7,600 is 33. No, it's 32,400. Sorry. 32,400 is with the company. 32,400 is with the company. And yes, the company will withdraw. Company will withdraw this in 26. Company will give this dividend in 26, 27. So now this individual will receive a dividend income. This individual will receive a dividend income of 32,400. 32,400 in 26, 27. My respected students, my respected dear student, you tell me, when company give you dividend, there is no allowed expense. It's not an allowed expense. Giving dividends, distributing dividends to ordinary shareholders, it's not an allowed expense. So in 26, 27 fiscal year, no more tax burden on company. No more tax burden on company. But yes, individual is receiving dividend income. 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 So individual has, listen to me, individual has to pay tax. But now in 26, 27, this individual is higher rate taxpayer. This individual is no more additional rate taxpayer. He's just higher rate taxpayer. So now let's calculate the tax. First thing, individual is a higher rate taxpayer or additional rate taxpayer or basic rate taxpayer. Always, always, always. First 2000 is always 0%. For dividend income, there is an NRB of 2000. For dividend income, there is an NRB of 2000. And yes, the remaining 30,400 will be used on higher rate. Tell me the higher rate. Tell me the higher rate of dividend. Tell me quick. Tell me the higher rate. 33.75%. Yes, very good. 33.75%. Tell me the amount. 30,400 into 33.75%. 10260. Okay, so this will be the income tax in future. This will be the income tax in future. And yes, you can compare this income tax with the current income tax. उर्दू में बात करूं तो देखें, कॉर्पोरेशन टैक्स तो दोनों में सेम है. कॉर्पोरेशन टैक्स दोनों में सेम है, पहले भी और अब भी, यानी वो तो देना ही देना था. डिविडेंड इनकम का टैक्स रेट फर्क हो गया, क्योंकि इंसानों के टैक्स रेट में हायर रेट, एडिशनल रेट और ये सब होते हैं, कंपनीज में नहीं होते. ओके, सो व्हाट विल बी द डिफरेंस, व्हाट विल बी द टैक्स सेविंग? कंपेयर दिस अमाउंट with wait with this 11962. Yes, this 11962 of income tax. 11962 was the previous income tax on dividend income, and now it is 10260. So when you take the difference between these two, you will get it. When you take the difference between these two, you will get it. Okay. Okay, let's see it. See this. This is the discussion. This is requirement number C now. Z Limited corporation tax liability for the year ended 5th April 23 will remain unchanged at 7,600. Definitely, you have to pay corporation tax no matter you withdraw or not. For 26-27, K Limited will be a higher rate taxpayer. Yes. So the income tax payable in respect of dividend will be reduced to 32,400 minus 2,000, which is NRB. at the rate, see now the higher rate of dividend. Now there is a higher rate of dividend. Now there is a higher rate of dividend, higher rate of dividend. Okay. The overall tax saving will be this. Just compare the income tax 1702 is the tax savings. And that's the end of this question. That's the end of this question. That's the end of this question, right? That's the end of this question. Now, students, did you understand the question? But one thing I would like to clear, there are some students, they haven't completed the course. There are some students sitting in the class right now. They haven't completed the course. And this area I teach in the last. This area I always teach on the last. The tax planning in my LMS is the last area. So you must have read